Hi, thanks for joining me on my market report. My name is Mike, and these market reports are on mortgage rates. If you're new to my channel or my videos, we kind of do these on a daily basis where we create videos on giving you the story behind what's impacting mortgage rates on a daily basis, whether it might come something from the headline news or it could be economic data that got reported or some geopolitical. Sometimes news that comes out that would be typically positive news for bonds are sometimes it comes out as negative, and sometimes you may not know that sentiment change in the markets if you're on the sidelines. We're here to kind of go over that for you and kind of explain as to the reason behind those and kind of give you some inside scoop as to what the markets are thinking and where they're kind of going towards, whether maybe rates are going upwards or downwards or going sideways. A little bit about myself is I am a loan officer. I do work with the national lender. We're here to help you guys out, whether it might come from refinances or purchases. So if you're looking to get a refinance, need some numbers and kind of go over things, we can certainly go over that with you. If you're looking to buy and need to get pre-approved, we can help you with the pre-approval and finance that next property. But we're also here to answer any questions you guys might have, whether it might be something about mortgage rates itself, or perhaps you got other questions like what programs are available out there, or whatnot. So we're here to answer any questions you guys might have. So please feel free to reach out to us anytime. Best way to reach us at this time is just to go through the social media site you found us at. We'll definitely be in touch with you folks. Without further ado, we'll just jump right into the today's report. We'll start out with the economic calendar. Today we got kind of two items, but one big item, and that is the pending home sales, or pending sales, excuse me. Home sales, yeah, for the month of November. So October, it went up. Pending home sales jumped up 7.5%. Forecast was supposed to dip a little bit because, let's be honest, we're over towards the holidays, so things usually slow down. 0.5%, and it actually pulled back. It dropped 2.2%. So instead of going up 0.5%, we ended up dropping 2.2% in the month of November here. So last but not least, we got this 7-year auction that happened just about an hour ago. This is the last auction of the year, so it did have a little bit of impact with us, but not as much as one would think. The markets are still a little bit illiquid. It's a little bit more liquid today than it was early in the week because of London kind of opening up. They were closed to their Boxer Day. So, anyways, so markets will probably be a little bit more get back to normal next week once we get back. The holidays are over, the New Year's is over. We'll probably get back to some normalcy, but right now we're kind of having this more illiquid market, so not a lot is going on there. So these little small shifts can create a little bit of a spike in one direction or another, especially by smaller investors that are out there. So prepare for some volatility in those cases here. So today we got mortgage-backed securities. We're down 25 basis points. As you saw, we were down further than where we started. Again, a lot of that's just been taken off earlier. That's led a lot of lenders to reprice for the worst. So pricing today is worse than what we did where we ended up closing yesterday. We did close up close to the 25-day moving average, but not quite hit there yet. But today we pulled back a little bit. So we're down about 25 basis points, which basically translates a quarter of a point in what we would have faced yesterday. All right, so here's the volatility of today. So as you can see, we went up a little bit, kind of stayed up a little bit, and kind of worked our way down. Had a huge swing here right around 10 a.m. 10 a.m. was a big swing. Of course, that was the auction, the 7-year auction. So we had this big drop, but since then we've been kind of subsiding back a little bit, kind of coming back a little bit. We were down, I think, right around 30 basis points at one point, and we've been kind of working our way back up a little bit better position right now. So, and now here's the yields. Yields are up about 1.54. As you can see here, we were at about 1.48 yesterday, and now we start off a little bit higher, and then since then has been going up higher. Now this one affects Nasdaq quite a bit because we got Nasdaq is full of a lot of growth stocks, and this increases their costs, and as a result, Nasdaq has been kind of in the negative territory while their costs are rising. That means there's less profit being made by those companies as their costs have been going upwards. So that's why you'll see Nasdaq kind of negative territory if you look at the stocks. Dow, I think, is still up a little bit today. Investors are kind of starting to shrug off. They're kind of waning concerns in terms of the Omicron virus, as we've been kind of seeing, even though we're seeing spikes of cases, we're just not seeing, they seem to be a much more mild form here. So we're not getting, the hospital. I don't think we're getting the hospital. My understanding is we're not getting the hospitalizations or the seriousness. So that way, the concerns of a possible lockdown may not occur here due to the Omicron. So this is obviously good news for investors as well as the markets, that we can hopefully keep continuing and keep pushing our way through to try to get some normalcy here. Um, all right, but last but not least, we'll touch on what rates are on the national average for rates. 30 years at 3.24%, and the 15 years at 2.59%. Now, these are average rates for the conforming limits. They do have points built into them. And if you followed my videos in the past, you'll know that there's no one size fits all. There's a lot of variables that kind of go into quoting a rate. So definitely work with a professional in terms of what you're looking for in a rate, and because what if you're talking to your friends or family or these people, they might get different quotes as well. And a lot of that has to do with not everybody has the same criteria, the same amount of equity or down payment. They may not have the same FICO scores. They may not have the same loan program, for example. It may not be looking at a lot of different. There's other variables that go into it as well. So keep those in mind when you guys are looking at rates as well. If you guys like to get rates quote, just please feel free to reach out. We can certainly work with you guys on that as well. So we're pretty much at the end of the video. If you guys like these videos, please help us out and smash that like button. We greatly appreciate you guys. Otherwise, we'll look forward to see you guys in tomorrow's video. You guys have a great rest of your day. Thanks for watching. Bye-bye.